Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. If you add ETH to your portfolio and rebalance it every so often, like once a year or every 3 months, to change how much those assets are worth, you usually get higher returns, similar volatility, which means higher risk-adjusted returns, and a lower maximum drawdown. The maximum drawdown is the difference between how much your portfolio is worth at its peak and how much it's worth at its lowest point. And that number is important because you can feel it in your gut when your wealth drops 25%. The thing about Bitcoin and Ethereum is that they don't exactly match up. Their jobs are different. In the market, they act in different ways. That time of year is Bitcoin season and ETH season. When you mix different kinds of assets in a portfolio, the results are better when you take risk into account. But when I look at what I think will happen in terms of flow and what you said about the supply of ETH, it's hard not to come up with a new all-time high. Ethereum is not being bought or sold right now. A lot more institutional money will put money into Ethereum than most people think, and the price of Ethereum is likely to reach new all-time highs by the end of the year. At my most recent meeting with Bitwise, their chief investment officer, Matt Hogan, told me that, if you want to read the interview, the first link in this sentence takes you to it on Crypto Nutshell. Matt Hogan talks about the upcoming Ethereum ETFs and states the case for investors to buy Ethereum right away in the podcast. He not only thinks that Ethereum's price will hit a new all-time high by the end of the year, but he also has numbers and facts that show that adding Ethereum to your portfolio will help you make more money while lowering your risk. You may not know Bitwise, but they are the 5th largest Bitcoin ETF issuer and hold more than $2 billion in Bitcoin. They are also about to start an Ethereum ETF. Matt Hogan is the chief investment officer, which means he knows more than anyone else about crypto and big businesses. To see the whole interview, click on the first link in the name. But let's start right away with Matt Hogan. Watch out. There are times when it's better to be all Bitcoin or all ETH. This is because Bitcoin and ETH both have times when they do better than the others. And God bless you if you know those ahead of time. But if you look at the whole stock cycle, the numbers show that you should combine them. It will work out better. Between what I think will happen with the flow of ETH and what you think will happen with the supply of ETH, it's hard not to come up with a new all-time high. Although I can only guess, I think we'll get there by the end of this year. We'll have to see how things go. I have 2 more things to say about ETH that might be useful, while the ETF isn't taking into account. I believe people aren't aware of 2 big positive factors in ETH right now. The first is that we've cleared up a lot of legal confusion about ETH ETFs and the role of ETH as a commodity in general. As an example of this, you can see that BlackRock set up a fund on Ethereum that has assets worth hundreds of millions of dollars. And I think that getting rid of the legal cloud is a huge plus. Then there's the Denkun upgrade, which fixed the scalability problem. This is the main reason I was positive about ETH at the start of last year, before we even thought about ETFs. I believe that issue was what ended the last bull market, even before FTX stabbed it. The market was killed when the price of ETH shot up to $200 and all connections were blocked. The benefits of the Denkun update haven't been seen yet, from what I can tell. I believe we will. With that increase in clear rules for ETFs, I think we'll reach new all-time highs. It used to be very dangerous for your job to say, I want to learn more about Bitcoin, or I think we should learn more about ETH, and there are times when that seems like a bad idea. We've all been through these bears. And keeping their jobs is the main thing that most people on Wall Street want to do. So there was a good chance that you would stick your neck out. Since Bitcoin ETFs were approved a few years ago and BlackRock, the biggest asset manager in the world, joined the fight, I think that job risk has gone down. Larry Fink, BlackRock's CEO and one of the most respected men in finance, spoke out in favor of Bitcoin on CNBC. It's not crazy or out of the question to say, hey, we should probably put 2.5% of our portfolio into Bitcoin just in case it keeps going well. That's now fine. That was the first step in unlocking this wall of riches. There's a lot of cash. 80% of the world's wealth is held by these groups. This asset space needs to be opened up to all of that. And they have a very small base to start with. I believe there have been many years of flows. What do you think this means? Ethereum ETFs will cut into some of the flows from. Do you think they will compete with each other at all? Will it change the path of some of the flows? On the edges, I think the answer is yes, but you won't notice because a lot of new money is going to come into this area. Some people have already put 5% of their money into Bitcoin, but they are now going to change it to 3.5 Bitcoin and 1.1 ETH. On the edges, that will happen, but it will be covered up by the new shares of people who are just starting out with Bitcoin and will now add ETH. That tale I've shared before, but I was talking with the head of a networking group worth more than $100 billion. He has foreign advisors who are in charge of more than $100 billion. He also didn't want to put all of his money into Bitcoin ETFs because they aren't diverse. But if he sees ETH ETFs come out, he plans to package them together and set aside a small amount for his company. I believe it will be more of that, but there will be some fighting around the edges, just like in regular crypto. There is competition between those things, but a lot of us are happy to have both. Going forward, I think it's likely that there will be a lot of crypto assets wrapped up in ETFs. Bitwise began as a source of index funds, which are single funds that hold multiple cryptocurrencies. In the long run, I think there will be a lot of ETFs that hold ETH, Solana, and other assets. I believe that's where we're going. In Europe and other crypto ETP markets that are already more established, you can already see that future. I have a lot of respect for the companies in the US that applied for Solana ETFs. I believe it was VanAck and ARK or 21 Shares. Great businesses and people. I think that's a long shot, not only in crypto but also in any other place where there wasn't also a regulated futures market. There has never been an accepted commodity ETF. Solana doesn't have a controlled futures market that is important right now. I just don't think it's likely. How are we going to get it? We might be able to get it if we get complete crypto laws that make exchanges like Coinbase more regulated. If the SEC changes its mind and US officials become more open, we might be able to get it. If I'm wrong and the smart people at those firms are right, which is possible, we could get it. In my opinion, it's not likely until we get new crypto rules, a change at the SEC, or other market changes. If you get me back in a few years, we'll be through with a sea of ETFs. A lot of people will use new crypto, and it will be fun to talk about. The gold ETF is still a gold bullion ETF. The SEC only gave its approval because there was a controlled gold futures market that it could check to see if the market was being manipulated. This futures market holds gold bars. Bitcoin ETFs are based on Bitcoin, which is not fully controlled like stocks are. However, there is a Bitcoin futures market that the SEC can watch to see if it's being manipulated. You can't see a regulated market halfway through the journey to Solana because there isn't yet a large-scale controlled market there. And that's what makes it hard. Once more, that doesn't mean it's impossible. There are other ways to get approval. This isn't a strict rule. History clearly shows this. It's not impossible that these ETFs will be accepted because of this. That's why I think it's a challenge or a low probability event. But you have to make a way if you want to follow it soon. So those companies deserve praise for paving the way. People will bet on gold in any new or developing market, in my opinion. I believe those models have helped people and the market understand it better. I don't think those models can tell us much about the future. There are two main ways I look at Bitcoin. To come up with long-term price goals, I kind of look at the model of the total addressable market and think about how big the markets it's trying to disrupt are. I believe that momentum plays a big role in Bitcoin in the short term, and you can't do much worse than to look at short-term momentum trends. For a short time, I think they're pretty good at predicting what will happen.